Joined now by Bob Iaccino in Chicago. He's the founder and chief strategist of Path Trading Partners. Bob, thank you so much for being with us. So I want to take a look and see how futures are doing right now. Good morning. I want to see how futures are doing right now because last time I checked, I think the Dow was down 100 points or so. Now it's pulled back ever so slightly, but it's still down about 69 points. So, I mean, just in terms of what's happened this past week, we've had positive gains throughout the week. I'm curious whether overall trade war concerns are back in focus, or is it just, investors basically taking some money off the table after a few straight days, of gains?
Yeah, I think that's probably what you're seeing this morning, Zain. One of the things that we're seeing here in the U.S. is that President Trump seems to be doubling down on trade tensions from his end during a period of very strong earnings, during a period of anticipated 4% GDP, during a period of very strong employment numbers here in the U.S. In addition to that, some wage growth starting to turn up. So it seems to me he's got some cover for this, and that's showing in the U.S. equity markets. Any little extra twitch, any little extra comment, we saw his economic advisor yesterday, Larry Kudlow, seem very negative about the trade tensions, and that's when we start to see a little bit of volume coming in, and I think you hit it right on the head. It's a little bit of profit taking. We're still seeing the dollar higher. That, in addition, is showing that money, including the domestic money, but money that needs to be invested so far, is still coming into the U.S., save for some of these overnight moves.
So here's what I don't understand. On the one hand, you have Larry Kudlow coming out and saying that trade talks have essentially stalled. And obviously, I can understand why that would make the market a little bit jittery. But on the other hand, you had Jerome Powell testifying over the past couple of days on Capitol Hill, who seemed to really have faith and believe in the strong sort of economic fundamentals here in the United States.
Well, Zain, I think you have to shift through Jerome Powell's statements. They were viewed as dovish overall, even though he's still saying the economy is strong. Essentially, our Fed here in the U.S. has been doing the same thing. They haven't been saying the economy needs rate hikes because of runaway inflation. That's never been paraphrased in any way. What this has been was the economy can sustain rate hikes. And he still seems to be taking that posture to me. And that posture, to me, defines him as being somewhat nervous, even though an exact quote was, "I sleep very well." I don't believe that. I think he wants to get these rates to where he has room for an impending crisis, and we could be seeing that in the continuing flattening of the yield curve driven by these trade tensions.
In terms of the flattening of the yield curve, does that concern you? Because obviously people talk about the fact that a flattening yield curve and then eventually an inverted yield curve is a signal of a recession. That's something that economists talk about a lot. But is it different this time, do you think?
I'm only concerned about the flattening of the yield curve, a little bit of theater of the obvious for you. The only reason I'm concerned about that is it could lead to an inversion. I'm not concerned with a flattening at all in terms of what happens specifically with banks. Banks have performed well during flat yield curves. We've seen that time and time again. But a sustained inversion of the yield curve has led to recessions. So it's only we're looking at a runway right now. We're not looking at anything else. So as it gets into single digits, I'll start to be very concerned about it. We'll start to see repricing, but we continue to see that repricing as we get closer and closer to that fact.
All right, Bob Iaccino, live for us there. Thank you so much. Enjoy your day, sir.
Thank you.
Okay.